Fibonacci retracement. This is one of the technical analysis tools that can help us to isolate key trading zones. It is the most basic Fibonacci tool. Fib retracement study the ongoing trend move and provide an area that the future corrective move could occupy. It is used to project the end of a correction, and many traders all over the world use these levels as a potential support and resistance. So our goal as a trader in an uptrending market is to buy from short-term weakness, and in a downtrending market is to sell from short-term strength. So we will use Fibonacci retracement to isolate the end of a corrective move. All right, so we can ride this impulsive move to the upside and to the downside. So we have a lot of Fibonacci ratios, but what we're going to use are 23.6%, 38.2%, 50%, and 618% retracement. And then lastly, 78.6%. So 23.6% is the less important level. 38.2, 50%, and 618% are the most important levels. So many traders are using these ratios to isolate support and resistance level. So 50% is not actually a Fibonacci ratio, but since there's a psychological reason behind 50%, 50% retracement works in financial market. And then lastly, 78.6%, the retracement of last resort. All right, so or the last defense in Fibonacci ratio. Retracement ratios are used to analyze corrective pullback by measuring previous trend move. So in an uptrending market, this is our impulsive move. So this is our higher low and then our higher high. Now once this higher high is already established, we can assume price will pull back, entered into a corrective move or corrective phase to create a higher low. So once we see price pulling back, we will use Fibonacci retracement to isolate the potential level where this corrective move might end. So we're gonna plot our Fibonacci retracement tool from point A, the starting point of this impulsive move, to point B, the end of the impulsive move. Then our ratios will appear. So this will be our pullback zone. This is where we will wait for this corrective move to end. So it could end at 38.2%, 50%, 618, or 78.6% retracement. So we don't know where actually a corrective move could end. That is why we still need to wait for confirmation. Okay? So in a downtrending market, we have an impulsive move downside, lower high to lower low. Now, once our lower low is already established, we can assume price to pull back entered into a corrective move to create a lower high. So again, as a trader, our goal in a downtrending market is to buy or to sell from short-term strength. All right, so this is where we will use Fibonacci retracement. So once we see price pulling back, we will plot it from point A, the starting move of our impulsive move or our lower high, to point B, the end of the corrective move or our lower low. All right, and then our Fibonacci ratio will appear. So this is our pullback zone or trading zone in Fibonacci retracement. Again, we don't know where this pullback or corrective move could end. So we will wait for confirmation. All right. So how to input Fibonacci retracement ratio? So I think most of the charting platform or trading platform um, provide a Fibonacci retracement tool. So when you see your Fibonacci retracement tool, you can customize the ratios, right? So we have 0 and 1. So this is our anchor point, 0 and 1. Now for 38.2%, we will put it as 0.382. For 50%, 0.5. For 618%, 0.618. And for 78.6%, 0.786. All right. How to plot Fibonacci retracement tool. All right, so I am using TradingView as my charting platform. And if you're using TradingView, you're gonna find Fibonacci retracement tool right here on the left side of your screen. So on the third row, you just hover your mouse and then click this tiny right arrow, right? And then drop down menu will appear and then choose Fibonacci retracement. So again, for our ratio, 0 and 1 is our anchor point, 38.2, 50%, 618, and 78.6%. Now, I don't personally use 23.6%, but if you want, you can definitely use it. All right. Okay, so we're going to analyze USD JPY daily time frame. So from here, as you can see, we are in a downtrending market, right? But right here, when price established a support, price impulsively moved up, breaking this previous lower high and made a new high, right? So we have a higher high. Okay. Now, since we have a higher high, we can wait for price to enter into a corrective move to establish a higher low in anticipation of another move up, right? Because we have this change in structure, so we are expecting for a price reversal. Okay, and also this is an impulsive move upside. Okay, so we're going to use Fibonacci retracement to project where this higher low could establish. Okay, so we will wait for a pullback. Now once we see an obvious pullback, right, so from higher high to higher low, we will now use our Fibonacci retracement tool. Okay, so we're gonna plot our Fib from point A, so where the impulsive move started, to point B, where the impulsive move ends. All right, and then our ratio will appear. Now again, we don't know where the corrective move could end, right? We just have to wait for a confirmation. So it could end here, 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 or even here. Okay. So one confirmation that we can wait is to wait for a candlestick rejection or a price action pattern, a continuation pattern. All right. So let's move forward. So as you can see, price is currently holding 38.2%, and price printed a low test reversal candlestick. So at this point, if you are a candlestick trader, you can definitely trade this, right? Then put your stop loss here, and yeah, just ride the move. Okay, so let's see what happened. Okay, so price moved down, testing this 50%. So basically 38%, 38.2% did not hold. We are currently testing 50%. Okay. Now, price is currently trying to move away from 50%. And as you can see, we are also forming a continuation pattern, right? Bull flag, pole, and then flag. Now, if you are a price action pattern trader, we can wait for a breakout if we want to trade this pattern, right? So price, and then there is our breakout, right? So we can trade this as a breakout, then put our invalidation right here, right? And then just ride the move. Okay. So 38.2% did not hold. And we got a rejection at 50%, right? And then price formed this bull flag. Okay, so let's see what happened next. So price moved up, breaking this previous higher high. So we made a new higher high. So price continues to rally. So if you did not uh, trade this first move, right? We can still wait for price to pull back since it made a higher high, and then wait for the next corrective move to end. Okay, so price continues to rally, and then price started to pull back. Okay, so what we can do here is we can plot our Fibonacci retracement tool from point A to point B and wait for a rejection at either 38.2, 50, 618, or 78.6%. All right. Okay, so as you can see, price just passed through 38.2% retracement. And then 50% is currently holding. And then price started to move up, breaking this previous um, higher high, right? So 38.2% did not hold. 50% is the level where this price are rejected. So looking left, we can also see that this 50% retracement level acted as a resistance before. Okay. So if you did not enter at this rejection, since we are now in an uptrending market, we can still wait for a pullback in anticipation for the next upside move. All right. So impulsive move upside, then now price starting again to pull back. So we can plot our Fibonacci retracement. So from point A to point B, then wait for a confirmation in this trading zone. All right. So 38.2% did not hold, 50% did not hold. Now we are currently testing 618%, and then boom, right? 618% rejected this price and then move to the upside. Okay, and then break this previous higher high. All right. Let's have another example. So we are looking at GBP USD 15-minute time frame. As you can see, we are in a downtrending market. So price impulsively moved down, followed by a very obvious corrective move. Okay. So let's see where this corrective move could possibly end. So we're gonna use our Fibonacci retracement tool. So since this is our impulsive move downside, from this point, we're gonna plot our Fibonacci. All right, so point A. point B. Okay. So as we can see, price did not hold 38.2% and then rejected the 50% retracement. Right. So this 50% retracement looking left also acted as a support before. All right. So price also formed a continuation pattern. All right. A bearish flag pattern. Now, once we see price breaks through this bear flag, that's our confirmation that uh, this downside move can continue. All right. So again, 38.2% did not hold, 50% held, right? And then price starting to move down. Let's have another example. Gold daily time frame. So as we can see from here, price rallied to the upside, creating a higher low and then a higher low, and then higher high, right? And then suddenly price aggressively moved down, breaking this previous higher low and created a lower low. So since we have a lower low and an impulsive move downside, we can expect for price to enter into a corrective phase and establish a lower high. So we're going to use Fibonacci retracement to project where this corrective move or pullback could possibly end. Okay. So since we are now seeing price starting to pull back, we can now use our Fibonacci retracement. So from point A, so where this downside impulsive move started, to point B, where this move ended. All right. So this is our Fibonacci ratios. As you can see, price is currently testing 38.2%. Okay, printed an indecisive candlestick, and then a bearish one, and then price starting to move down. Right? Did we test 50%? So we barely tested this 50% retracement and then eventually move down. All right. So as we can see, this area between 38.2% and 50% retracement held, right? Okay. And then move down. Now it don't expect that price will exactly reject this level, right? So since Fibonacci retracement is also a support and resistance level, we could expect that this level will be a zone, right? Not an exact level. Okay. So going back, price moving down, breaking this previous higher low, now creating a new low. Okay, as you can see, price started to pull back again, so we made a lower low, right? So if we assume that price will continue to go down, we can plot our Fibonacci retracement, right? So from this high to this low, so 38.2% did not hold, 50% did not hold, and then we are currently testing 618%. Then price actually break this 618 and then tested the 78.6% retracement. So again, we don't know where the market will reject. So we really have to wait for confirmation. As for this one, price tested this 78.6% retracement and printed a high test reversal candlestick. So let's see what happened next. Price moved down, breaking this previous lower low. All right. So price created this lower low, new lower low, and then right now it is starting to pull back again. So if we want to trade this, we can again plot our Fibonacci retracement tool from this high to this low and wait for a reaction at our pullback zone, right? So 38.2% did not hold, but as you can see, at 50% retracement, price printed an indecisive candlestick, right? And then reversed. Okay. All right. So that's how you use Fibonacci retracement.